Investors, hello! This is Stock AI Insights, and I'm your Chief AI Analyst. Now, just a quick reminder, this is for educational reference only, not investment advice. All investing involves risk. So today, we're jumping in to deconstruct the AI stock roller coaster. We're going to tackle that huge question on everyone's mind. Are we looking at a speculative bubble that's about to pop, or are we on the ground floor of a massive long-term boom?
And let's just dive right in. The Wall Street Journal, I think, said it best this week, calling it a crazy roller coaster. And that's exactly what it felt like. We saw some really strong earnings reports that you'd think would send stocks flying, but instead they triggered these huge sell-offs. It's a textbook case of buy the rumors, sell the news, you know? Investors are just cashing in their chips after this massive run-up, and it's leaving everyone else scratching their heads, wondering which way is up.
And this chart, well, it shows you that chaos in black and white. Just look at these wild daily swings in the S&P 500. You've got a 1.5% gain on Monday, totally wiped out, and then some by a 2% drop on Wednesday, then a little recovery on Friday. I mean, this isn't just normal market noise. This is the kind of whipsaw action that really gets people nervous, making even seasoned investors second-guess every single move they make.
So what's the engine powering this whole chaotic ride? Well, as we're about to see, the answer is the AI market itself. Let's trace this volatility right back to the source.
Yep, all signs point in one direction, the AI sector. It's kind of ironic, isn't it? The very same engine that rocketed the market to these incredible highs is now the main source of all the anxiety. And why? Well, because the whole sector is in this weird state of flux, where this massive, incredible hype is clashing head-on with some tough questions about real-world profits. And that battle is creating the wild swings we're all feeling.
And that brings us perfectly to our next section. We're going to decode those specific investor jitters that are adding all this fuel to the fire.
Which brings us to the big question, right? What is really behind all this fear? Because this goes way beyond just simple profit-taking. There are some deep structural concerns that are just bubbling up right under the surface. We're talking about everything from frankly dizzying valuations to this strange, almost circular ecosystem that might be creating some serious hidden risks.
So here are the 5 big ones we've zeroed in on. First, you've got bubble-like valuations. Prices that just feel disconnected from reality. Second, big questions about profitability. A lot of these companies are just burning through cash. Third, some pretty extreme market concentration. Fourth, massive spending financed by debt. And finally, this really curious thing called the circular ecosystem. Let's break each of these down. First up, concentration risk. You know the names, we all do, the Magnificent Seven. We're talking Apple, Microsoft, Alphabet, Amazon, Nvidia, Tesla, and Meta. See, the recent market rally wasn't very broad at all. It's pretty much been held up entirely by this small group of giants, and now their fates are completely tangled up in the whole AI story. Now, just to really drive home the scale of this, look at this chart. That massive slice of the pie, that's the Magnificent Seven. They now make up roughly 30% of the entire S&P 500, and that makes the whole market incredibly fragile. Think about it. If just one or two of these giants stumble, the ripple effect could pull everything else down with them. Okay, next let's talk debt. Building the infrastructure for this AI revolution costs an absolute fortune, and some companies are borrowing huge amounts of money to pay for it. Oracle's a perfect example. They're taking on significant debt to build out their AI cloud services. And lenders are starting to get a little nervous that these companies might be taking on way too much, way too fast, especially if that AI revenue doesn't show up as quickly as everyone hopes.
This next one might be the trickiest risk to get your head around, this idea of a circular ecosystem. Okay, so picture this tangled web where all the big tech players are investing in each other, selling to each other, and buying from each other. So Microsoft invests billions in OpenAI, right? Then OpenAI turns around and uses that money to buy cloud computing power from Microsoft. It could create this kind of house of cards, where if one company wobbles, it could set off a chain reaction through the whole system.
Here's a really simple way to think about it. Imagine a potluck. The chefs are the big tech companies, and the ingredients are all their AI services and cloud computing. They're all buying these super expensive ingredients from each other. So on paper, the total value of this feast looks massive. It looks like it's skyrocketing. But is it actually real, sustainable growth? Or is it just the same pot of money moving from one chef's pocket to another's all around the same table?
So, as you can imagine, all these complex risks are creating this huge divide on Wall Street. You've got some people screaming bubble, while others are saying we're at the very start of a new tech boom. So in this next section, we're going to look at both sides of that argument, boom versus bubble.
So you've really got two sides of the same AI coin. The bulls, the optimists, they point to this explosive growth in AI adoption, the trillions being invested, and they say, hey, we're just in the early innings of a decade-long transformation. But then you've got the bears, and they're pointing to these sky-high valuations, the lack of profits at so many AI companies, and they're seeing some really worrying echoes of the dot-com bubble.
And one of the loudest voices in that bull camp belongs to Dan Ives. He's a really well-respected tech analyst at Wedbush, and he's known for being bullish. He argues, and I quote, "The AI revolution is only in its third year of a decade-long cycle. Tech stocks should be bought on dips." So for him, all this volatility isn't a red flag at all. It's a buying opportunity.
And the bullish argument actually gets a lot more nuanced than that. They insist you can't just paint every AI stock with the same broad brush. You have to separate them into categories. You've got the resilient giants, like Microsoft and Google, that have all these other revenue streams. Then you have the proven players, like Nvidia and Broadcom, who are already making tons of money from this. And then you have the highly speculative plays, the smaller companies that still have a lot to prove. So with these two really powerful, really conflicting stories, how are you supposed to think about the AI space right now? Well, in our final section, we're going to lay out a framework that might just help you navigate all this uncertainty. A lot of experts are suggesting a three-step framework. First, focus on the fundamentals. That means you've got to look past the hype and really dig into things like actual revenue, profit margins, and cash flow. Second, diversify your AI exposure. That could mean thinking about a mix of different types of companies, from the big established giants to the guys building the infrastructure. And third, you have to distinguish between the players. Really do your homework to understand the difference between a proven winner and a pure speculation.
And let's be absolutely crystal clear about the goal here. The main takeaway is that this isn't about trying to perfectly time the market. I mean, that's just a fool's errand. It's about understanding the powerful forces, the risks, and the opportunities that are all at play so you can make more informed decisions for yourself. The AI market is complicated, it's volatile, and there are definitely no easy answers.
Which leaves us with the ultimate question for the future of this market. As this whole AI-driven recalibration keeps going, will the solid fundamentals of profitable companies ultimately win out over all the speculative hype? So here's our pulse verdict. The AI market is a high-stakes game of chicken between incredible technological promise and some pretty serious speculative peril, and right now, it is not at all clear who's going to blink first. What do you think? Let us know your thoughts in the comments. We'll see you in the next episode.